Investors and traders, welcome to the channel Market Chart Pattern. Today is 15th of May 2024. I hope everyone is having a great day. We will be taking a look at the key US markets in this video. As always, this video is for educational purposes only and is not a financial advice. We will start by taking a look at the US dollar. I believe this is the chart of the day. And then we will start by taking a look at the US debt markets through the eyes of the US treasury notes and bonds through using bond futures. And then we'll take a look at the gold market, and then we will take a deeper dive into the stock indices. Okay, so this is the daily chart of the dollar index, and what we see is a massive candle where the dollar has moved lower, and this is what we were discussing yesterday. Now I'm just gonna bring back this chart because today is something really interesting which happened. This is what we were discussing, the way I think the markets are setting up for the summer of 2024, and one of the key things that we are watching is the US dollar, and we are watching the bonds yields. So that's the US bonds mainly. So what we are looking at is the possible way the macro is setting up is with the US dollar actually moving lower and the yields moving lower, which should be actually good for or supportive for the risky assets such as the stocks. So the stocks higher. Metals such as gold, we are neutral to higher. Neutral being that there are already a massive move which took place in the gold market, but doesn't mean it cannot go higher. And other commodities such as softs and grains, neutral to excuse me, higher as well. So this is the kind of macro that we were discussing yesterday that might actually be setting up for the next few months. And what we see today with the CPI data coming out is that there was something in the data which actually caused the dollar to be moving lower, and the way it has done this is in candle formation, which is known as moriboso in the candlestick terminology, because you can see there is very little to no wick at the top and there is no wick at the bottom, and usually this sort of a candle means continuation. We have seen a variety of this kind of a candle right here. There was a bit of a continuation to the downside, but a candle which is this strong means that there is probably going to be a continuation move to the downside. Further, what we have been watching is that, look, this is the wedge formation here with using these blue lines here. The market actually closed below it and also below the 38.2% retracement, and that is when we started to talk about the dollar getting weaker, and then it had a bit of a rally right into the moving averages, which acted as a resistance, and now the price is below the 8 moving average, below the 20 moving average, so the momentum is also not bullish for the US dollar. So we had a double top formation come in here, and this is another double top formation in my opinion with respect to this. Just a simple ABCD drawn in a purple. I could actually see the price move to about 103.50. And what's really important from a longer term perspective is if the dollar index breaks below the 99 level, then that would be an indication that it is likely to go much lower. Now on the flip side, if we take a look at the euro currency versus the US dollar, you can see a very strong move today. It just broke out of this trend line yesterday, and we were talking about if we could get 2 consecutive daily moves, then that would be very bullish for the euro currency versus the US dollar, and we have seen a very positive move today. Now another thing to note is that on this channel we really like to talk about this concept of the symmetry. So we do have a symmetric move, which is where the market is right here right now. So I've just copied this here, and you can see this market is actually very close to that level. So could we see some consolidation of after such a long bullish move today, and continuing over the course of few trading days? Yes, sure, that is possible, and there is also a possibility that we are here at a level which might be very close to one of these fib levels, like 50%. But this came in as a very strong support at 106, and breaking with the trend line is more of an indication of a continuation move in the US Euro USD to the upside, in my opinion. Yes, sure, there could be a pullback right into the moving averages. Maybe this channel line, this trend line, might begin to once a resistance turn into support. So that sort of pullback is possible, but the candle looks pretty strong, and it'll be really interesting to see how the market will trade tomorrow. Now we will begin to take a look at the US Treasury, shorter end of the curve. This is the 2-year Treasury note. And here, this is the pattern that we had been watching. Left shoulder, head shoulder, right shoulder. And if you look at these black lines, one-to-one price projection, ABCD, that calls for the yields to move as low as 3.9%, where we could have pretty strong support come in. So again, the chart looks quite similar to the chart we have in the dollar index going over the course of last month and a half. And now the yields actually moved sharply lower as well on the 2-year Treasury note. The 2-year Treasury note is something which the Fed really watches really carefully, and in my opinion, a lot of their decisions might actually be based on what the 2-year yield is actually doing. But again, that's just an observation based on the analysis I've done on 2-year Treasury note yields and the Fed funds, and how the US Treasury 2-year note could dictate the Fed funds rate. Okay, so now we'll take a look at the 30-year long bond futures. Here we go. So now it's moving up right into 118.22. That's going to be the bearish symmetry top pattern right here, and also getting very close to this channel top here. Moving above this, I believe it is already moving in the CD leg higher, which could in fact see this move as high as 130, 126 to 132, and that's gonna be a massive relief on the yields for the longer end of the curves. And if we were to take a look at the 10-year, 10-year is really important, not only because it's a big market, bigger than the long bond futures, but also because 10-year duration is such a benchmark which is used for a lot of loans, for credit card rates, for auto loans, many things. So again, it is actually already broken above the bearish symmetry, getting above this 38.2% retracement. 10-year note is actually looking pretty good. Really nice move higher, meaning yields lower. And then we will also take a look at the TLT, which is the iShares ETF for treasury bonds of duration 20 plus years, so long duration. And here we are really watching for 92.40 level, and it has reached around the what it is telling me is closing is 92.25. So again, this pattern that you see in the shaded area, ABCD, much like very similar to the 30-year long bond futures, we could see yields move much lower and the prices for TLT move much higher. So again, going back to the macro that we were looking at, US dollar lower, bond yields lower, and that should be constructive for risky assets. Now we'll begin to take a look at the stock indices. We'll start by taking a look at the European markets. So if we take a look at the FTSE from United Kingdom, had a move which was also positive, but if you look at it, it's just been on a tear ever since 16th of April when it hit this 38.2% retracement, and just a really strong move. Only two days of consolidation, so wouldn't be surprised if there is going to be a little bit more consolidation and the moving averages kind of catch up with each other. And what this pattern is calling for is a move as high as 85.70 and a little bit higher as well, like 86.50, because of this ABCD. And on the other side, the German DAX was also bullish today. And the interesting thing is that after just 2 days of consolidation, the market broke above the highs of 10th of May and above this 1.272 expansion, and now the shorter term near target in my opinion for German DAX is 19,160. This is a shorter term target, and there's a possibility that it might in fact be moving in an ABCD pattern higher, which could see the prices move way higher, maybe even beyond 20,000. I haven't drawn the ABCD on this, so it looks like there's a lot of money which is pouring into the European stocks. Maybe they're undervalued, but this is what is this index is telling us. All right, now we'll start by taking a look at the European stock indices. We'll start by taking a look at the SPX, which is the S&P 500 cash index. And wow, new all-time highs today. It just smashed through the old highs. And where it is going, we already have the 1.618 expansion at 53.8970. So let's just call it 53.90. And it looks like it is going there. Now I'm not drawing further price targets yet, but this is something which had been there from before, and that is this BC swing here of this longer term, the pattern formation in black line. And also, if we were to do it on a shorter term, just an expansion. Here we go. So we are also getting, a confluence level between 53.50 and 53.90, and something a little bit above that as well. These are the levels that the market is likely to reach over the course of a few more trading days. Now, with this kind of action, the low of 19th of April is the low. So I'm going to take the other things out of I'm going to remove those and also clean up the chart a little bit. Okay, maybe I'll just do the cleanup later on. Just makes the chart cleaner and easier to look at, so that's always a good thing. And we could see, it left a gap today. There could be some pullback. The gaps get filled, but very strong move in the cash. And if we look at the S&P 500 E-mini futures, and the interesting thing is that again the cash moved, actually made a new all-time high, and the futures haven't done that yet. So the futures are testing the old highs from the 1st of April. Now this is a really interesting because the cash is actually leading, and the futures are a little bit they are behind. I don't know the reason for it, but it could be that the macro situation with interest rates is changing, and there is maybe this is how we are seeing it being reflected. Just my opinion, I don't know, but it's really interesting development to see that the futures are actually a little lower and the cash is higher. And here just want to bring up this screenshot which we did from the video over the weekend. So these are the weekly ranges that we were expecting, and for the ES the +1 standard deviation was 53.32, 75, and that's what we have actually pretty much hit. We are a few points away. So that is the +1 standard deviation, and the +2 standard deviation for the weekly could actually see this move higher to 54.24. Now, just some ranges. I'll just put this in the description. These are the ranges to be expected for tomorrow, 16th of May. So 53.02. I'm sorry, I think I did not update these closing levels, so these are wrong, so I'm sorry. I'll just do that, and I will put it in the description, update that. Apologies for that. Okay, and then we take a look at the NDX, which is the NASDAQ 100. Look, fantastic. new all-time highs. And if we just look at QQQ, boom, this is what we actually discussed yesterday. Also went above this. And now let's take a look at the NQs. And here we go. This is the NQ, again, just like the ES, testing these highs of previous highs of 1st of April. So really interesting development with the NQ. And now if we also take a look at the YM, and there we go. It's above the 78.6% retracement. It's gonna go and test these all-time highs. And last but not least, which is the Russell 2000, lagging a little bit here, but above the I believe it's also above its 78.6% retracement. Yeah, it is. So that's really good. And if we just look at IWM, here we go, and it also closed above 78.6% retracement. So these markets are strong, and this is what we discussed when we based on the timing model that we follow, that we were looking for the correction to complete by the end of May. However, if we were going to be strong into the second half of the month of May, then the chances were that maybe we could have seen a low earlier, and that certainly looks like to be the case. However, we'll still be watching that time period window from 24th of May to the 29th of May, because the model is giving those dates out, and it's a timing thing, not necessarily reflecting the magnitude, but more on the time side. So we'll just see how the price action will pan out during that window. So thank you very much for watching the video. If you like how we do the analysis here, then please do subscribe to the channel, and if you found this video of educational value, give it a thumbs up. Thank you. Speak to you soon. Good luck. Good trading.